Good afternoon and welcome to this week's NZX webinar. We're pretty excited about this one. We're bringing options to capital to you all, and I've got two amazing speakers today who are very experienced in all sorts of capital, and I'll give you some insight to their background shortly. But what I wanted to say for those listening today is there's probably a mix of different people looking for different questions to be answered today, and we're just looking at this as starting the conversation. So Ross and Sarah won't turn to mist after this. They're accessible. I'll do a follow-up with information as well, but let's just have this the start of future conversations. So let's get into it. So look, Sarah, can you talk us through your background so people can kind of get an idea of your history?
Yeah, sure. Hi, everyone. I'm Sarah Minhinnick. I'm the head of issuer relationships here at NZX. So I started out my career actually in New York as a lawyer in structured finance and M&A. And then after several years of that, decided to come back home to New Zealand and went into banking. Did all kinds of things in the banking world at ANZ and BNZ. So, you know, aircraft leasing and then a lot of capital markets. So, everything in the debt space through to hybrid equities. So sort of been all around the balance sheet. And then I joined NZX in February. I had about 15 business days before the lockdown. So it's been a real roller coaster of a year, but there's heaps of good stuff happening. So here we are.
Awesome. And Ross, other than having the pleasure of working with me at Once Upon a Time.
Absolutely, JJ, and that was part of my banking career. So yeah, Ross Verry, Chief Executive of Syndex, and have been for the last 4 years. So yeah, I'm an ex-banker. I had a 20-year career, mainly dealing with privately owned businesses, certainly in the latter part of my career. My last role was General Manager of Agri, which was responsible for the strategy for our farming businesses at the ANZ, which was the largest portfolio in New Zealand. And prior to that, it was mainly large family-owned businesses. So now I'm a business owner myself, myself and 13 others, shareholders in Syndex. So I've got a little bit of hands-on experience of stuff that I used to talk about before I knew anything about it. So yeah, Syndex, the purpose of it is to solve for some of the issues identified in private markets, certainly some of them that I saw as a banker, and one of those major issues is accessing capital for growth and for succession or any number of things really. So apart from that, I do a little bit of governance work. I'm a chairman of the board of a large-scale farming business, privately owned farming business. I'm also involved on the board of a public company actually, so also connected to NZX, and I suppose adding to that mix, I've been a director of the New Zealand Cricket Players Association for the last 10 or 11 years. So that's me.
Awesome. I just want to remind people who are listening also that please feel free to ask questions through this. You can do that in the area down the side of the panel, but do please ask questions, and because we want to make sure that we're hitting the mark and giving you the information that you need. Now, Sarah, do you want to talk us through like why have NZX and Syndex come together? Like, what's the value of that partnership?
Sure. We're really excited about the Syndex partnership. One of the reasons we wanted to enter into that is because, you know, obviously NZX, it's New Zealand's stock exchange. We're purely in the public market space, and everything is publicly traded. And Syndex, conversely, is purely in the private market space. So we thought, wouldn't it be great to form a partnership where we could go and present to companies together about what the whole range of capital raising options is, from, you know, the private markets through to the public markets, so that people could see, you know, there's a range of options and we can help you match up with the exact right capital raising option for your particular point in your life cycle of your company, or to match exactly what your goals are. And then also, you know, to make a pathway for companies to really get, well set up on private markets if that's what they choose to do first, and then have a migration to the public markets. And we've got a couple of examples of that now. So Rural Land Company have announced their IPO for later this year, which is awesome. They've been on Syndex for some time. And then also Too Cheap Cars, which is a new entrant to Syndex's platform. They've also publicly announced an intention to list in Q1 2021. So, that sort of shows how we're thinking about it and how the progression can be. And it's an awesome partnership.
Cool. So there's an opportunity to provide solutions at different business cycles, so that if we work more together, then I guess we're providing a wider range of solutions as well. Now,
yeah, exactly. I mean, I think people might think, often we just want to get the listing, whether it be for Syndex or for the exchange. And, for us, actually, the period after that, the 10 years or 15 years of a company's sort of life after that is what's really crucial to us, because, the listing is really only just the start of a new chapter. So I think to be able to match people exactly with the kind of right kind of capital at the right time is really crucial to that.
So Ross, can you talk us through just the difference between public and private? Because I'm sure lots of people know what the difference is, but I know for me it took me a while to get my head around what that difference was.
Yeah, and look, I mean, certainly NZX, it hosts public listed companies. So you and I or anyone could go on and they'd have the opportunity to buy shares, sell shares. There's been some great innovation across the NZX over the past few years. When we talk about private, I guess we're talking about, and I'll use business as an example, where I suppose that they're privately owned. The owners may want to keep it that way for various reasons, certainly at a certain point of time. And whilst they'll make their performance and other relevant information available to their investors or people that might want to invest, that the rest of their, I suppose, business activity they want to keep private from, I suppose, let's call it the public, and they'll do it for I suppose a range of reasons, and we might talk about those a little bit later on. But perhaps one of them is that they may want to think about their business in terms of very long-term and intergenerational framework, perhaps, or certainly over that period of time, and they may want to make decisions for the long term, which may impact, for example, short-term results, which sometimes in public markets, have an impact on valuation or profile or things that they don't necessarily, want to share with everybody. So I guess the consequence of that for the wider investment community is that private markets are often fragmented. There's what we call an asymmetry of information, where some investors might know more than other investors or potential investors. The instruments, the shares in a private company, it might be infrequently traded, and therefore there's little liquidity. So the investors who go into a private investment because they like their business, they might just need to recognise that it's going to be harder to get their money out in the future if they need to get it out. So those are I suppose, some of the challenges of the private markets and being an investor in a private company. I suppose what we're trying to do at Syndex is maintain some of those benefits of private ownership while providing some of the assurances to investors, like they would receive if they're an investor in a public company. So there is sort of transparency around information performance. It's fair to all investors, and that there is a form of liquidity, which we think is very important when people make investments. So we've got rules about disclosure, not as high a bar as NZX, and I guess we set them as we do to reflect the fact that we want investors to have good information to make good decisions about investing, but we also recognise that some of those private companies aren't as well resourced, don't have necessarily the I suppose the skills and the time, etc., to report in such a way as a public company would.
So it's a great transition or way to understand what disclosure looks like, and in the private space.
Yeah, we think so, and that's a sort of discussion we've had with Sarah and the team. We think that we offer a pathway along to the public markets where people can learn a little bit, get experience of how to deal with external investors, what their expectations are around information, communications, tradability of their investment, those sort of things, and so that when they do, if they do get to the stage where they want to list publicly, they're kind of ready to go. They've had some good experiences.
Awesome. Now, Sarah, like if someone was going to publicly list or potentially even privately, is there kind of a business stage in their business cycle that's better than another to do it, or is it just, does it not matter?
It's a really personal question, sort of company by company. So we look at a range of things. Typically the companies that we focus on tend to have a good growth rate. We look at other things like, what's their market position? Do they have some kind of competitive advantage? What's the long-term outlook for the company? All of those sort of good key indicators that will show, possibility for a company to be successful over time. We also look at the management team experience because, going through a listing process is, it's not terribly time consuming, but, there is an element of work in doing that process. And we do look at, do companies have some of kind of the non-sexy things, I guess, like good accounting systems and financial systems, and the ability to cope in the listed environment, being able to release full and half-year financial statements and having good investor relations capability around that to be able to deal with inquiries and things. That's not to say if you don't have those kind of things that you shouldn't consider it. It's just definitely have some conversations with us or with Ross or others around it in terms of implementing those things for your business so that you can start to get your ducks in a row for a listing profile. We do have some minimum requirements that are just part of the listing rules for listing on the exchange. So a company valuation of sort of in the ballpark of $10 million, a shareholder spread of around 100 shareholders, and a free float, so traded shares of around 20% of the company as absolute minimum baselines. And again, if you don't have those things, that's okay. You can still come and have a conversation with us. We see very frequently, amazing businesses that have been started by, one person or two friends or a family, and they say, well, we have 5 shareholders, how could we possibly qualify? But, there are things we can do to help you with that, to get you to around that 100 shareholder mark, that will help you.
Cool. So if someone kind of had a goal or aspiration to be listed in 5 years, like don't wait 5 years, come and talk now, so then you can start making sure you're on the right flight path, where it might work in with Syndex, or it might be something that they go away and do by themselves, but it actually helps them. So don't be afraid to come to us early.
Yeah, exactly. That's absolutely right. We have very long running conversations with people. They come to us 2, 3, 5 years out and say, hey, look, in 2025, I'd love to list my business on the exchange. And I think it will have this valuation and look like that. And, we love working with companies early because it gives us an opportunity to really engage with them and help them get ready. So yeah, absolutely. If it's kind of on your 3 or your 5 or even on your 10-year plan, definitely come and have a conversation, and, we can connect you into the right places to help you with that, including Ross's platform.
Oh, I mean, I think the thing is too, isn't it, is what I heard you say was, you might have a great idea, but you do need to be investor ready, and I think and what that will look like is something that investors can clearly understand what your business is, what the plan is, what the potential growth is, what the potential strategy is, and I guess and I find sometimes when I have conversations with people that in the early stages of fundraising, it's really difficult sometimes when you've just got a brilliant idea and you want to get something sort of rolling along. It's, you know, Ross, is that something that you can work with people when they're kind of in that really startup stage?
Yeah, we can, and we have done, and it's really interesting. I mean, you know, we've got a community. It's quite a diverse community actually, in terms of investors, and you know, there's a range of people. Some who are very focused on, I suppose, the yield type investments where they're, you know, going to get an income paid quarterly, and they use that to I suppose fund their lifestyle. To people who are, you know, much more interested in the early stage and got a perhaps different profile. But the other interesting thing is that, you know, often they're the same people, you know, more often than not. And I remember when we first, you know, started the business, and one of our first customers was my farm, and so, you know, there was a certain profile of investors, and you know, they, you know, really focused, I suppose, on the income that some of those my farm assets were generating, and then, you know, all of a sudden we started having some conversations with perhaps a couple of ag tech companies, and it was just intriguing that, you know, some of the people that had invested in my farm for what we thought was a particular reason were also very interested in ag tech, and so, you know, I guess everyone's got a portfolio, and there's different sorts of, you know, I suppose distributions of those of assets across their portfolio, and you know, we've found them very, very, I suppose, open to different types of ideas. So yeah, it's a long way of saying we can help, and we enjoy helping, and I'm sure Sarah will talk about this as well. But you know, that's one of the discussions that we've had with the NZX, and NZX is, hope you don't mind me saying, has got involved with the Angel Association. So you can see the pathway. You know, we can start between us working with very early stage companies through to, you know, an ultimate listing, you know, whereby all sorts of investors get the opportunity to you know, get an experience with a public company.
Yeah, I agree with that. As Ross said, we're very engaged with Angels. We sponsor Angels Association New Zealand, and we're also, you know, working a lot with Snowball Effect, and we're engaging with the Ice House. So as Ross said, it's kind of a small world in New Zealand, and everyone sort of knows each other, but you know, everyone I think is keen to help New Zealand businesses, especially, you know, when you think about the recovery from this pandemic, and you know, how can we lift up people's well-being economically as we come out of it. You know, the best way to do that is to have strong and successful New Zealand businesses, and anything that we can do to achieve that is great.
Awesome. And it sounds, I guess, for people need to think too that there'll be different solutions at different times. So there's not kind of a set and forget. You're not going to kind of jump onto a system or onto into a framework of capital today, and it lasts the life cycle. It's going to shift and evolve over time. So I guess people need to just kind of be mindful of that, where it becomes horses for courses. Now, Ross, the other day when we were chatting, you said, you know, we're talking about options to capital, but you also made the comment that investors are actually looking for places to put their money where, I mean, I think the 2 and 3 year swap rate went under zero this morning. So, you know, like,
yeah,
could you want to talk us through, you know, that investor appetite?
Yeah, sort of picking up on a quote that Adrian Orr made when he was on the back of announcing one of the OCR cuts. I think it was earlier on the year, and I guess I think it was on Breakfast TV from memory. But one of the questions was, well, you know, how are people who rely on, you know, let's say interest from term deposits, from corporate bonds, government stock, etc. You know, how are they going to adjust to that, because it's been I suppose a pretty harsh reality for them over the last last 2 or 3 years. And the quote he used was that, you know, people are going to have to put their capital to work a little bit more, you know, which is I guess going to take some excuse the pun, investment in time, and you know, getting the right advice and you know, all that sort of thing, developing a portfolio. But I suppose you know, there's obviously been some, you know, really strong interest in stock markets, public stock markets over the last, you know, well, since the first lockdown, I suppose, isn't it? But we also saw it in alternative assets, and I guess, you know, coming back to the point I made earlier, that a lot of our investors are looking for investments that, you know, do deliver income to them over the time that they understand, and so that's actually created a little bit of innovation amongst some of the issuers, and the examples that we're seeing on Syndex. You know, commercial property schemes have been there for a long time, and commercial property syndicates. So people have been able to invest proportionally into, you know, commercial buildings, whether it be industrial, office and retail, which, you know, probably take a little bit more thinking about now. And I guess, you know, Syndex was actually formed in response to that development of that market to give investors some liquidity, so they could get money out when they needed it. But one of the really interesting developments has been around agriculture, and I guess, you know, a lot of New Zealanders have affinity with agriculture and historically haven't had a chance to get exposure to it. And now, you know, there's been, I suppose, the equity partnership concept that's developed over the years, but it's probably morphed a little bit more most recently, and it's become really attractive to a lot of investors, whereby the issuers have separated the land ownership, and New Zealand rural land codes like that too, actually. They've separated the land ownership from the operations and, you know, let's say the commodity price risks. So, you know, some people will feel very comfortable investing into land, knowing that they're going to get a stable lease return, and knowing that, you know, if the milk price, you know, doesn't have a great year, that they're not going to be as exposed to it as what they would be as if they were investing in the whole business. And, you know, maybe they don't understand the global dynamics. So it's been that sort of product which I suppose gives people more options if they've, you know, if it suits their risk appetite and suits their understanding of the sector. And a couple of things, I guess, in other businesses, we're going to see on our platform over in November some examples of business syndications where people, you know, who own established businesses, they're looking for different ways to, I suppose, remain private, certainly for a period of time, but introduce new investors to either, you know, release some capital for themselves if they're at that stage in their life, or to grow their business. And that's a little bit different, and we'll offer liquidity for that. But, you know, it's really exciting because there'll be some quite sort of established names that, you know, some of our investors who might get the opportunity to invest in, having maybe spent a lot of money there in the past, or seen a lot of money being spent there in the past.
So fear not, there is cash awash, and people are looking for places to park money. So it's not that there's, you know, often we hear that there's no one's investing, but it sounds to me like there's money there. It's just people will be, I guess, specific about where they want to put it. But there's plenty of cash out there, right?
Yeah, look, there seems to be, and you know, I guess the great thing about, you know, capital markets is that they evolve, and you see innovation to, you know, respond to what investors are looking for and to what issuers are looking for. And, you know, I think we've seen a lot of that across the markets over the last, you know, two or 3 years, which is great. And we like to, I think we both like to think that, you know, we've been part of it and want to be part of it. That innovation.
Now, this is a question for both of you, I guess. You know, over the years in banking and everything that you've seen, what are the 3 most common kind of errors that that just keep popping up that you see people do when they're either raising early capital or in the midst of trying to list privately or publicly? You know, Sarah, have you got any thoughts to start with?
Yeah, absolutely. And I preface it by saying we've had a lot of capital raising on the stock exchange this year. We're nudging up against 13 billion. So there is definitely plenty of cash around. And I think all of those companies have done an excellent job, especially in really trying conditions. And the good thing too is the market's working really well, because we've seen everything from kind of $1.1 million type capital raises for Enterprise, right through to jumbo capital raises of 1.2 billion for Auckland Airport, and everything in between. And there's lots of companies that have been doing smaller raises of kind of 2 million here, 4 million there, which is great because it means it's not just, you know, for the big games in town. It really is working well for everyone. So I think, you know, all of those companies have done a really excellent job. I think if I talk more holistically, I think, you know, if you are heading into a capital raise, you want to have a really clear and consistent message for your investors and just be really transparent and crystal clear about what that message is. And I do think on the whole, pretty much everyone does that, but that's certainly something to focus about. I think also leaving yourself plenty of time so that, you know, if you can, you head into the capital raising process with a relaxed time frame, and you maybe have a week or two of slippage in your timetable if you need it. So you have kind of a target date, but then a backup date for raising. And again, you know, I think in a pandemic, one of the beauties of the listed market is that companies are actually coming to market super fast and raising capital very successfully. But I would put that in a more extreme category. And in normal times, you want to have, you know, as relaxed of a time frame as you can, just to take you know, pressure and workload off your executives and your directors. And then the third thing I would say is you want to retain flexibility for if there's just intense market volatility. You know, I've certainly worked on deals in the past, like when the Greek sovereign debt crisis was really at its peak. You know, I was in the middle of a capital raising for a company, and they very intelligently said, you know what, we're just going to pause this for 3 weeks and then we're going to come back. And having the ability to ride out periods like that is going to give you a much better outcome, and also avoiding periods that are clearly, you know, potentially going to be volatile. Like, for example, you know, US election on the 3rd of November, you would not really want to be launching a capital raise on the 3rd of November if you could possibly avoid it. So just factoring in all of those things, I think, are good things to keep in mind.
Cool. Have you got anything to add to that, Ross?
Yeah, I can probably talk for private companies that, you know, maybe doing it a little bit earlier in their lifestyle and its life cycle, and yeah, perhaps with a hint of personal experience as well. But the first thing I'd say is, yeah, people or business owners trying to do it themselves, and I guess, you know, that there's risks in that. I mean, there's lots of good advisors out there that you know, you can get their skills, experience, connections, and really benefit from them. Yeah, you might need to pay a fee, but it's worth it. And I guess the other thing is, you know, as an owner undertaking a process like that, it's very time consuming, and you've got a business to run and to grow. So you don't need the distractions of you know, going home at the end of a hard day and starting to write an IM. So that was the first one. I suppose the second point I'd make is, you know, try and keep it simple. And again, you know, you can make it very complex, you know, and use all sorts of different instruments. Sometimes they do make sense, but sometimes they just make it really difficult when you're trying to introduce another investor, you know, later on down the track. And I think the other thing with private companies, you know, you're obviously going to allow investors to do due diligence on your business. You need to do a bit of due diligence on your investors as well, because you know, one, it's great to be able to introduce people who have, you know, some real sort of skills and experience you can benefit from. But you want to also understand their motivations and their values, and, you know, all that sort of thing, because again, if people go into these relationships with different expectations, and you find that out down the track, it becomes really difficult to you know, unwind for all parties. Yeah, so I suppose those are the main things that I've just observed around private companies, just little things to think about.
It sounds like, you know, and Sarah, you touched on this too, there's almost a psychological, emotional component that's outside getting the business investor ready. You almost have to get in your own mind, you know, you're getting different people. I mean, for some, I imagine, I would find it hard. All of a sudden, you have these different people own your business. You know, at what control could they possibly have? There must be, you know, this kind of real it sounds cheesy, but there must be quite an emotional journey for some to go on to kind of get to that stage. Have you, have you experienced that, or what can people do? Is it just about working and talking to you guys and making sure that, you just kind of vent it out, get it out?
Yeah, I think it is really interesting, the emotional component, but what I would say is it's really fulfilling. So we had an IPO on Thursday last week for Rua Bioscience, and that's a company that is focused on medical marijuana and the technology around that. It's iwi driven out of the East Cape region. They're based in Ruatoria. It's not a it's actually a very low socioeconomic area, and what's absolutely amazing about that company is just sort of their mission to grow the company, be good for the region, and just really lift up the whole living standard of the region. And it was actually quite emotional last Thursday, because we had the listing event and we had it live streaming between Auckland and Ruatoria, because they had asked with COVID that we didn't go into the community just to protect their elders. And but they had their whole community from the marae, and they had all of the kids coming in, and they blew a conch when we rang the bell, and it was just amazing. And then I saw the video afterwards of them explaining to the kids how the stock price was trading, and the stock actually traded up 38% on the listing day. And it was just, I think, for the people that started the company, Panapa and Manu, I think it was just an extremely fulfilling experience. And they did talk about the journey that they'd been on in terms of engaging advisors and what that was like for them. But I think they connected with the right people that they were comfortable with, and in the end it was really just an amazing experience for them and kind of the fulfillment of a dream. So yeah, I definitely think there's an emotional component. There's a big kind of story to it, but what we do say and see when people finally list their company and they ring that bell is it's a pivotal moment in their life. They have their family there. It's like getting married or graduating or the birth of a child in a way, because it's just one of those moments you never forget.
So they're awesome kind of
yeah, that was a long story.
What's that?
Yeah, I think so.
Yeah, I think the other thing, in terms of getting other people involved, that perhaps the founders need to think about. They obviously recognise the benefits, and getting different people around the table with different ideas that they can tap into. I guess one of the things that I see that worries them from time to time is will they retain the ability to make decisions really quickly? And I think about and farming or agriculture is always one where people will say that the best farmers who get the best results or the best growers are people who can make decisions like that. They sort of see something happen, they can react to it really quickly, and they worry that that they might have to engage with all the other sort of investors or influencers, whereby it's all about, right, if you're still in charge of the business, you're still management, you make management decisions. Governance is there for other reasons, to bring strategic value and hold you to account, but it's just sort of get clear in your mind what you're responsible for and what governance is responsible for.
Yeah, and understand that there's not all of a sudden going to be a bunch of randoms on the phone, telling you how to run your business. It's still, I imagine that to be quite scary for some. So I guess it leads on to then, and again, for both of you, or Sarah, actually, I'll start with you. Who do we need in the system? Like, who do you need in your ecosystem around you? There's, I laugh when Ross was saying, don't do it on your own. But I think by nature, we have a startup, we're in a SME, and we're so used to being Johnny on the spot, and we do everything. But who do we actually bring into the team?
Sure. So I think it is a good idea to have some financial and legal advisors who can help you, with the valuation of your company and with the legal work, whether you're doing a private market listing or a public market listing. listing, and you do need audited accounts pretty much always in our world. You also need an appropriate board of directors. So the requirements for the exchange are that you have a minimum of 3 directors. 2 of them need to be usually resident in New Zealand, and 2 of them out of the 3 need to be independent. So just having those people in place, that can sometimes be a process that takes a little while to get the right people on the board that you're comfortable with, but also that match your company in terms of their expertise. Having someone, whether it's in the company or if it's contracted out, because there are organisations that deal with this for companies, but that can handle sort of the investor relations and PR component to being in the listed world. And then I would say, NZX, or Syndex, as the case may be, bring us into your conversations early. Certainly from the NZX side, as I said before, we have very long dated relationships with people, which is great. And we have those conversations years out, and we don't charge anything until pretty much right up until, the week before you're listed. So it's all free. And we really have a lot of good resources that can help you connect into the right people, or assess, if you're looking at possibly doing an acquisition or making your company bigger or something, we can provide you with data on where that will get you to in terms of the next stage. So I think having all of those people sort of surrounding you to help you is certainly well worthwhile.
And so Sarah, or Ross, if someone's not sure, like I imagine, I wouldn't know who to ring to get a valuation of a business, and and I assume it's probably a specific type of lawyer, not necessarily Barry who put together your trust and your will. It's going to be someone that's got quite specific needs. So can you both support people finding the right people?
Yeah, absolutely. I think both of us are very well placed to connect you to the right people. Certainly, we usually give people at least 2 or 3 options so that they can meet with people and assess who they're comfortable with and get different pricing points. But I definitely would encourage seeking advice and connections from us on that, because we see these deals go through all the time, and we know who the right people would be for you to be talking to.
Oh, sorry, Sarah. Oh, you've come back. Sorry, we lost you for a second there.
That's okay. Where did you hear up to?
No, can you repeat that? I'm so sorry.
Oh, okay. So I'll start from the beginning. So yeah, we can certainly connect you into people in all of those areas, and typically what we do is we give you 2 or 3 options so that you can go and talk to people and assess who you're comfortable with and get different pricing points and quotes and things. But we would certainly recommend that you do come and talk to us and get connected that way, because we do see all these deals go by, and we know who's doing what in terms of different sectors and different types of companies and different stages. So that's something we can really help people with.
Awesome. And I guess it's like anything, it's a relationship, isn't it? So it's kind of intimate having people fossick through your business. So you'll be able to link, I guess, the personalities or types. Obviously the skill is important, but the right chemistry with the right people around the advisors must be really important as well.
Yeah, I think it's a lot like choosing, a doctor or something. You definitely don't want to be working with someone that you're not comfortable with, and someone that you like, because this is a really exciting thing that you're doing. So you should enjoy every step of the process, I think. And also remember that you're the client of these people, and they should be, guided by you in terms of what you would like to happen.
I think what I've loved hearing from both of you, and it's probably something that I didn't appreciate as much, is this isn't about selling your soul. It's actually very purpose-led. It's about pride. It's just as much a very purposeful thing to do, public or private listing. It's not just about getting that money or getting that ownership or capital. It's literally a much wider way to achieve some awesome goals. And you talked about Rua with the community. I imagine there's probably lots of other things in the pipeline around New Zealand that could be similar for. Now, on that note, though, we did get a question submitted earlier from someone when can a nutritional and superfood startup Superfood startup locate capital easily without relatives and friends. So this will be real early seed capital.
Yeah, look, there's a number of options. I mean, you know, in terms of, I think, you know, both Sarah and I would say that we've had pretty good sort of experiences with the angel community. You know, we're doing a, you know, let's call it I suppose a joint effort with enterprise angels at the moment, who we partner with in different initiatives, and you know, that's kind of evolved. But you know, the angel associations are people who can, you know, sit down, talk with you, sort of understand what your aspirations are. They you know, they can, I suppose, help you through the process of you know, pulling a pitch deck together, for example. If they obviously, if they think it's, you know, got merit, they will put you in front of their investor community. In this case, it's a, you know, it's a business called Applebee Farm, so happy to sort of mention it. Great product, it's ice cream.
I know their ice cream well.
So yeah, so it's sensational. Yeah. So you know, in that case, it's also sitting on the Syndex platform, and we're taking expressions of interest and handing them over to you know, Applebee Farms and Enterprise Angels for further discussions. So yeah, angel community really good. There's obviously a crowd funding network, and to Sarah's point before, you know, it's often what you're comfortable with. You know, both those type of options, they will give you access to different types of investors. From an angel perspective, I guess what you're looking at is you know, perhaps more experienced, more active investors who you know, might have a wide portfolio amongst let's say other angel companies. You know, crowdfunding is exactly, I suppose, as it's described, it's the crowd. You'll get lots and lots of shareholders, and you know, there's all sorts of different reward structures for the shareholders. So so those are a couple of options. Have you?
Yeah, I think that covers it very well. But you know, obviously, if you have more in-depth questions, come through to Ross now afterwards, and we'll make sure we get you to the right places.
Yeah, we can make the introductions that Sarah talked about.
It's, again, I'm sorry, I feel awful because I'm the one learning heaps on this, but I do wonder too at times. Now, I would personally be like, oh, I just when I want to borrow some money from the bank, I fill out that little form online and it all just happens magically in the background. And you know, what I'm hearing you both say is you know, be prepared for legwork, be prepared for there's not a quick one-hit solution. You know, there's not a magic formula. You can't say to people, if you do these three magical things, investors will fall from the sky. It's actually a process, and it's really personal to each business. Is that kind of a fair statement?
Yeah, I think that's spot on, and you know, you do get out what you put in, and I think, you know, anytime you're trying to get money anywhere, whether it's from the banks or if it's from, you know, the various funding platforms or from the public market, you know, because it's other people's money, people dive pretty deeply into where that money is going, and I think, you know, regardless of whether you're in private or in public, you will have to disclose a reasonable amount of information to get people to invest, and just be, you know, ready for that is a realistic expectation to set for yourself.
But I kind of imagine too, it's one of those things that you're a bit daunted by, but it must help businesses do better business, because when you've got to answer to someone else, you know, you start to look at things a little differently within your business, because you've got other people that you have to answer to in a nice way. But I imagine, you know, do you find that it actually helps people get better with business as well?
Yeah, look, I think so, and I mean, I guess that, you know, right from the start, they'd sort of sit back and think, okay, what's the problem I'm trying to solve for example, and how am I going to solve it? And you know, you can go right back to that sort of level, because, you know, you might think of it at the outset when you found your business or start your business. but it certainly doesn't hurt to be reminded of what you're there for. And investors have often got a way of asking questions that really sort of test you in terms of what your purpose is and why you're good at what you're doing.
Cool. Now I'm just going to wrap it up because we're actually totally out of questions. But is there any last messages either of you want to leave or both want to leave people on the call with, in regards to any pearls of wisdom or insight or recommendations for them?
I mean, my top tip for people that are thinking about possibly a listing in the future is practice acting like a public company for several months or a year before you actually do it, and just sort of try it on for size and see how you would feel about if something material happens. Think in your head, how would I feel about disclosing that to the entire market? And having people know about it. And some people will go through that exercise and think, great, that would be great publicity, or I feel really comfortable. And other people think, oh my goodness, I want to stay in the private arena. So that's my number one tip. And then the other one is just, if you would like to have a conversation, please do reach out to us, because we love hearing about people's businesses. We have people in Auckland and Wellington, but we also travel, so we can come to you. We love actually doing like workplace walkthroughs and seeing what people are up to. So we're happy for any of that.
Yeah,
cool. And we just had a question from someone who wants to connect with you both. So I am going to send your contact details out after this so that anyone can get in contact if they want to have a one-on-one time with you. Sorry, Ross, you go. I'm sorry I cut you off.
Yeah, no, that's fine. No, I guess my suggestion to people who do see great opportunities for their business, or if they want to, I suppose, pass the baton over to others to either take it to another level or to get some capital out and just change their own lifestyle, is don't be afraid of potentially engaging with external investors. And understand that there are hurdles to get over in terms of what you think it might look like with other investments and with other ideas and influence. But there's some massive upside from getting external capital in, whether it's private or public. And one of the questions we used to sort of ask of our customers in the bank, going back in time, what would you do if capital wasn't a problem? And if you can have those, I suppose, aspirational, conversations and thought processes, you often get really excited. And there's lots of different ways now that you can access that capital to achieve those aspirations that you have for your business.
Awesome. Look, I mean, I guess what I've heard today, and again, I'm quite excited because I now am more inspired by capital, is, it is different for everyone. So one size fits one. It's not a one size fits all. It's not a binary thing. It is very holistic, and just do the legwork, like get out there and actually, I guess, don't be afraid to expose your business to other people, and because you'll get good feedback. Sarah, I've sat with you before, and I know that you go through businesses and give people brilliant feedback around what can they do and the areas they may need to work on. And Ross, I know the same of you. So I guess we just say to people, don't be afraid. Like, actually just give it a go. No one's going to get hurt. It's just, if nothing else, you're going to get a bit of a free warrant of fitness across your business, and an opportunity to understand what you need to do.
Yep, that's great, JJ.
Right, cool. Well, look, have a good day. Thank you for your time. Thanks for those who tuned in for your time. I'm going to send a follow-up out this afternoon or tomorrow morning. You can then track Ross and Sarah down. Please, I really, really do say to you, do track them down, do talk to them, and, good luck to everyone with their capital raising journey. So thanks so much. We'll see you later.
Thanks, everyone.